This is my weekly market recap. So in this video, I'm gonna be going over every trade I took, every trade I should have taken, right? So, and we're gonna be going over the every trade I took, what was the lessons from the trades, right? What can we take to next week and avoid to next week, right? So we cannot make the same mistake over again, right? So on this week, on Sunday, I was very bullish because of that. On Sunday, I did not put the video online, but I did get set up, right? So on Sunday, the way I took this trade was basically out of this, right? So the Monday part, I mean the Sunday, right? As you can see, the drawn liquidity, you were in a huge order block. So I was basically looking for like, yo, you feel that for 40, you feel the 50%, you feel the 50% mark of the, 4-hour order block. I was basically looking like for a confirmation out of here, basically a hourly confluence, which I had here because the market was just going down. The market was trending, but this right here, that's the same thing as a 30-minute confluence, right? So the 30-minute and the hourly time confluence got touched. So once it got touched, all I was looking for is a buy pattern or my execution tree. My buy pattern was basically this entry zone right here, this red, green, right? So right in this candle, I entered somewhere over there, right? But I entered somewhere over there, right? My first take profit was here. I got out right here, but the main drawn liquidity was over here. So what was the lesson of this trade? Is that the lesson of this trade is believe that your concept will deliver, know that your concept will deliver, and go for the drawn liquidity, right? Because this right here was not drawn liquidity. This right here was the real one. Because why? Because this right here was the recent session high, which is the drawn liquidity, right? The recent session highs and lows are usually the drawn liquidity, provide gaps, daily high, daily lows, 4-hour lows, 4-hour highs, trending lows, right? Like that, and such, right? So that's what trade I took on Sunday. On this day, all we could have done better was just to know that your concept will deliver, right? Believe that your concept will deliver. Be confident on the setup, right? And other than that, it was, go for a drawn liquidity, you know what I'm saying? The drawn liquidity was here, was not this high, right? All we came back down, yes, but the main drawn liquidity was over here, right? So fast forward to Monday. Monday was a trendy day, so you can see the market was just trending to the upside, as you can see, trending to the upside. So I was basically looking for a reason to get in because the drawn liquidity over here. The reason the drawn liquidity is over here, as you can see, set out recent lows right here, took out the recent session lows. So the next drawn liquidity, the recent session highs were over here, right? So all I was looking for an entry, I did take the trade as well. So yeah, so all I was looking for is an entry right over here, and I was looking for a confidence to get in. So the confidence for me, the market was trending, as you can see, going up, lower, higher, higher, low, low, higher, high, lower, low, right? As you can see, then this 30-minute building block was enough for me. It was a 30-minute order block, that was enough for me to get in, right? So looking for me to get in. So yeah, so let me go over here. Where was it? So I was looking for is a 5-minute confluence, which was a 5-minute super liquidity, and a 1-minute break control that happened over there. Or I think it was a 1-minute inverse. If a flag got inverse, so I entered on that. So that's right below this, right? Take probably here. What was the lesson of this trade? Right, the lesson of this trade to me looks like to be, right, the market wasn't trading. The drawn liquidity was a recent session high. The confirmation that it wants to go to the drawn liquidity was the trendy 30-minute order block. It was the move to the to the drawn liquidity, right? So on this trade, I have a lesson on it as well. Let me see. So the market went back to the huge order block, right? Get a 50% fill of the 50% fill of the order block. We needed a confirmation that you want to go to the next drawn liquidity. So early order block was enough that it was a confirmation that you want to go higher. You want to go higher to the drawn liquidity, and what the drawn liquidity was a recent session high. As you can see right here, right? And Tuesday, this trade I did take as well. I did take this trade, and I took it on demo because I can't go sales, right? But the trade the reason I took the trade was the Perviga that got filled, right? And saying order block, as you can see, look in the commission area. This day the market was trendy, so the market was trending, the market was going down, right? The drawn liquidity was the recent session lows where I went for, and yeah, that's when I hit take profit. And the reason I entered the trade was a 5-minute breakout structure, a 5-minute building block, which was the order block and breakup block. They both got touched. Entry right there, right? A reaction, a building block plus a reaction. Enter that, and right here, right? Take profit was right here. So the drawn liquidity was in recent session low because it took liquidity from the buy side, right? So that made the next drawn liquidity to the downside, which was the recent session low. So Well, what did we go sell on this, right? If you can see the higher time frame, right? I mean, if you go the previous session, right, the market literally filled the fair value gap in all the way, took out a liquidity from here, right? Took out session, reached session higher from right here, and yeah, that caused the market to go down. Now the trend is back to bearish, so the bearish sign is right here, retention low, and other lows over here as well, right? But I only went for the one take profit because that was the retention low, right? Fast forward to the next trade. I did take this trade. From here on, I just got cooked left and right, right? So after this day, if you can see the hourly time frame basically, as you can see, shut out highs, filled the fair value gap in all the way. So the drawn liquidity is basically bearish because that was enough for the market to go back down, right? Right over here, bearish. The take profit was resistance lows, which was 1 and 2 right here, right? And I took a trade in between it. So what did I do when I took the trade over here? This trade right here was not a good trade at all. It's just because that on this trade, I went against the drawn liquidity, right? I first went against the drawn liquidity. I went against the hourly buy. So I should have looked for I went against the hourly buys. No, I did not go against the hourly buys, but I did went against the drawn liquidity. I should have waited for more of a higher time frame confluence. As you can see right over here, if this was not enough, I just got manipulated and the market just came out, took me out. And yeah, that's the first loss. So what was the lesson of this loss is that, man, I went against a drawn liquidity, so I became liquidity, right? So when I get a setup, when I have a setup and I get another setup against it, I have to let the first out of it take profit for proceeding before where I will get manipulated, right? And yeah, and I was trying to catch a retracement, which was not a good move because why would you want to catch a retracement with the market going down, right? Catching retracement are not good, right? And this other session, the same trade I took, right? But that's when I catch a retracement again, which was a bad move because session move was down because I drawn liquidity to the downside, right? So that's one the reason I entered this one. Cheaper liquidity, 5-minute order block got 5 minutes people liquidity as well, and a 1 minute reaction. That's why I put myself right here. Take profit was all the way over here, but it's pretty just because, right? Because he didn't hit take profit, and waited them, and I catch a retracement, which is not good, right? So next time I gotta know that I cannot catch a retracement of the market, right? Catching retracements are not good, right? So yeah, that's that. And yeah, so when the market came here, went to the hourly fair value gap. So now this the retracement got a retracement. Now the market buys. If it's going even lower because it retraces to an hourly fair value gap, right? Right when it trades to it, broke structure down, hourly in 5-minute order block, right? And breakup block got touched, right? Entry there, boom, take B right there, got smashed, right? This trade, point of this trade was basically that, saying the drawn liquidity to the downside because they filled a fair value gap. The next drawn liquidity to the downside, the recent session lows, which was right over here. Went to the recent session lows, and yeah, hit take profit. And I did not take that trade, by the way. This trade I did not take as well. So yeah, let's go over this trade. This trade, the drawn liquidity to the downside is because why? As you can see right here, the drawn liquidity was up right here. It touched the 4-hour order block and breakup block. As you can see right there, touched the 4-hour order block and breakup block. So now that the next drawn liquidity to the downside right here, see recent session lows, recent session low in the fair value gap, right? The drawn liquidity to the downside basically touched the 4-hour order block and breakup block, which makes the next drawn liquidity to the downside, or we call it at the recent session lows and a fair value in the fair value gap, and we call it inside the huge order block, right? Which was right over there. That's sort of a fair value gap, right? I did not take that trade, by the way, but we could learn from the trade as well. So on this other trade, I did take this trade, but it was on demo, right? So this trade, what the drawn liquidity to the downside because the market took resistance and highs, right, and retraced to the drawn liquidity, which was the order block and order block, breakup block, and fair value gap. Then the next drawn liquidity to the downside, which was the resistance and lows, right? So what I mean by this is that you can see right here, it showed out the resistance and lows. So the next drawn liquidity from here was up here, so we traced to this huge order block and breakup block, right? And fair value gap, filled the fair value gap in, gave us an entry model. 5-minute order block, 5-minute order block and breakup block. Plus, if breakup to the downside, entry was right there. First take profit was right here and right here, right? And yeah, so that's a trade that I should have taken, right? And I did take, but it was on demo. It was not real cash. So yeah, and this other trade right here I overtook, right? This trade was basically a retracement. It's not good, right? So the reason I took this trade is showed out daily lows. So looking for a 5-minute breakup structure, I get a 5-minute breakup structure. I look for a 5-minute building block, which is order block and breakup block. And I'm looking for a 1-minute entry. This first one right over here was not a good entry because it's a 2 p.m. and what was the lesson for the trade is that when entering, look for a building block plus a building block with a reaction, right? Then enter, right? Or look for a breakout structure, because my interest should have been right here. And yeah, although it went up here, this was a break-even trade. And what did we learn from this trade is that when you're entering, look for a building block plus a reaction to enter the trade, right? Do not enter too high or too low, right? And other than that, it was that do not catch retracements. The session move already happened, and I don't know why I'm catching the retracement, right? We'll test the recent session. This is the fair value gap right over here. Let's see the market came down here. I took another trade in agent session. This right here was not the real trade, so I gotta time the market, right? And I did not take time the market, so it became liquidity, right? So I took the trade over here. So why did I take the trade? The market gave me a 38 order block. So yeah, I took that out. 5 minutes with liquidity. I thought that was enough for me, right? I thought that was enough for me. Boom, entered that. Boom, sell stop hit, right? So what was the lesson for the trade is that when the market is moving sideways, do not look for a 30-minute confluence. When you're looking for a 30-minute confluence, only look for a trendy 30-minute confluence, right? When the market is going a trend up or down, that's when you look for a 30-minute confluence. When the market is going sideways, you don't look for a 30-minute confluence. You look for a hourly or above time frame confluence, right? And on this trade, and on this lesson was that, other than that, is enter too high, right? As I said, building block plus a reaction, but I waited too long and I got a high entry and I got cooked right here. Sell stop hit, right? And this right here was the real move, because why? So that the recent session lows, 5-minute order block, a breakup block, you know, and touch it right there, entry right there, sell stop right here, and this take profit right here, right? You see right here, right? As I said, drawing liquidity to the upside because we took recent session lows, and the confirmation to the next drawing liquidity to the upside is when the market took the recent session lows, and the next drawing liquidity on a 4-hour for a gap, and the recent session high, which was all the way over here. You see, it was all over here, but I just put it just here, just, you know, saying I don't want to kiss the whole move, right? Caution. So I said right here, caution. We got 30-minute time frame confluences. The 30-minute confluence has to be a trendy confluence, not sideways. When the market is in a sideways, look for a hourly confluence, or what do you call it, higher time frame confluence, right? Withdrawing liquidity confluence is basically fair value gaps, hourly time frame, by the way. So yeah, that was a trade for that. This right here was the real trade. This I was trying to get this trade like this. This was the real trade. This is the manipulation trade I took, and yeah, I got cooked, right? Other than that, I had another trade over here on Friday. This trade I did not take. I thought I'm not supposed to use a 30-minute, but now I found out that on this trade, you know, saying the 30-minute was a confluence to get me in, because the market was on a, you know, uptrend, right? So that 30-minute confluence is enough for us to go up, right? So my take profit was basically on its hourly highs. Not hourly highs, hourly for value gap, right? The market came back down, touched the 30-minute order block, buy pattern happened, right? And the entry right here, sell right below the sell liquidity sweep, take profit right there. I draw liquidity up to the outside because the liquidity became bottom liquidity, and there was an hourly for value, which was a draw on liquidity. So that the confirmation to the upside was a 30-minute trendy confluence with that order block, right? Which was the order block right over here. Now the next day, this was on the 20 o'clock, and right here, the reason this went down, right? I did not take the trade. I did not take the trade. I took this trade. I did not take this trade, right? Yeah, I did not take the trade, and I did not take the trade, right? And I did not take the trades, right? And I took a loss, another loss right there. So the drawn liquidity to the downside, because the market touched the hourly fair value gap, which then made the next drawn liquidity to the downside. 4-hour fair value gap, you know, which call it 4 fair value gap, just got a touch, not a deep fill. The market wasn't in sideways, meaning that the market wasn't trading, so the 30-minute confirmation was enough, right? Was enough to go downside, right? The 30-minute breakup block was enough. Then take profits at the 4-hour fair value gap and the resistance lows. 4-hour fair value gap started right here. The 4-hour fair value gap just got a touch of it, which is not enough. Which, you know, a touch of a fair value gap, which is not enough till the market comes back down, which is down. You know, it takes more order to it, right? And the market came back down, right? Give it a 5-minute fair value gap, which is the 5-minute building block I was looking for. A reaction out of it, boom, into right here. So I was waiting for a building block plus a reaction, which I did wait. And yeah, it's also right above this. Should have been right here, right above the fair value gap. And yeah, that right there, TP1 was the start of the 4-hour fair value gap. TP2 is right here, right? And this trade right here, the reason I lost this trade was just because I took a trade to the upside. You know, what was the reason I got in? 4-hour fair value gap got filled, right? But keep in mind that hourly time frame is against our bias, right? While the hourly time frame is against the drawn liquidity plus is against the drawn liquidity plus is against the 4-hour bias, right? Because the 4-hour is bullish. So I was looking for a reason to get in, which was the 5-minute, 5-minute breakout structure, 5-minute order block, breakout block, got in, right? You sweat that liquidity. So and guess what I did wrong is that I went against the drawn liquidity, which the drawn liquidity was still the lows. Sweat that low after this. The next drawn liquidity is up here because it's a 1 hour fair value gap. Market, I mentioned the market came back down, right? Sweat it out, which now it took me out. So the lesson for the trade: do not go against the drawn liquidity, and if the hourly time frame against the 4-hour and the drawn liquidity, look for 15-minute breakout structure, 15-minute confluence, right, to the upside. And other than that is, man, look at the market better, because this right here, and now wait for 15-minute confluence, so I became a bit patient, and I should not go against the drawn liquidity, right? So I took a loss over there, so right below there, and I guess I got wicked out. So, and this trade right here, why did I take this trade? So the reason I took this trade, I did not take the trade, but I should have taken this trade. This trade is supposed to be this trade, right? But next time we just gotta know that to time the market. I just had to time the market, and I will be right Taki. All you gotta do is just time the market, get in the right position. I don't need to take multiple trades. All I need to take is one trade, because if I take the one trade, I'll be chilling. You know why? Because when I time the market, when I time the market and actually take the right trade, I don't need to take more than one trade, right? I just need to take one trade. That should be enough, right? So the reason I took this trade, I should have taken it, right, is because you could see 15-minute super liquidity, which was my 15-minute confluence, and plus out of the super liquidity. Other than that, I was looking for that 5-minute was against my bias, so I was looking for a 5-minute building block or 5-minute breakout structure, which I had right here, 5-minute breakout structure, and building block was a order block, breakout block, and breakout structure happened right here. So that's right below this low. Take profits right here because there's a 1 hour fair value gap, which was a drawn liquidity. Eventually the market came back down. Here at 30-minute order block. 30-minute order block gave us another entry right here. Came up, right? That was enough. The market came back down and gave us a little better entry right over here. So sell right below this. I should have taken a trade as well. And the drawn liquidity was on the end of the 4-hour fair value gap, which was right there, right? So yeah. And why was this up? While the drawn liquidity was to the upside because they filled the 4-hour fair value gap and took resistance lows, which made the next drawn liquidity to the upside. Confirmation to the confirmation that was the resistance lows taken out and cost you on this trade. When the owner is against your bias and the drawn liquidity, look for 15-minute breakout structure or 15-minute breakout structure or 15-minute confluence, right? So another trade right over here. This trade, the key point of this trade is to just so the key point of this trade is just to recall it. The reason I took this trade is just that the drawn liquidity to the upside, because it took the market trended to the upside. Market touched that fair value gap right here. The next stop for the market is right here before going back up, which it did. The fair value gap was not strong, so the fair value gap needed deeper fill because you just got a touch of it, fair value gap. So the market needed a bigger fill so that take profit at the end of the fair value gap, which was the drawn liquidity, right? So, and I took another trade over here. And then I take it, by the way, I should have taken it, right? But it was 10 a.m. It was 4 a.m. I was not awake. So what was this? Why I take this trade? Because it touched a hourly order block, hourly fair value gap, right? And our 5-minute confluence is 5-minute fair value gap plus a breakup structure. So outside below this, take profit right there. The drawn liquidity to the outside because the market touched a 1 hour fair value gap and order block. So that makes the next drawn liquidity to the upside, which was the recent touch and highs to the confirmation to the upside was the hourly fair value gap and order block. And why this trade was so good, it's just because that the hourly fair value gap got disrespected, right, and became a reversible fair value gap. And yeah, fast forward to today's trade. I took this trade. This trade was a break-even trade, right? So let's go over this trade. This trade was basically, the reason I took the trade was it filled the fair value gap in at halfway in, right, 50% mark. Other than that, what it did was build liquidity in 5-minute time frame. There was a news play right here that I was looking for it to come back down, which is right here, order block, breakup block, right? Sell start right below this, and I was waiting for an entry, which was right over here. This is the exact trade I took, right? So I was waiting for a reaction to get in. I was looking for a 1-minute breakout structure or a reaction to get in, right? Build the block plus the reaction, and to that, sell start right below this. Just came out, and take profit was right. It was not here, it was above here, so that's why this show was a break-even trade, right? See the hourly time frame. The reason the market came back down on that day was just because See the hourly time frame, right? The hourly time frame showed out liquidity right over here. Showed out the recent session liquidity, plus he showed out the high, right? So that basically made the move the market down. This right here should have been my take profit. Next time I keep in mind, then I look at the market today, right? So the drawn liquidity for this trade was sort of upside because first took out the recent session highs, which so the market went to the hourly for buy gap, and the next drawn liquidity was back to the upside, which got swept. But there was an exit place where the news was high. Where the news high was before the market going back down to the going back down, right? And the confirmation candle was the hourly fair value gap to the upside, right? So now the next trade, I took another trade over here, by the way, and this is a sell top hit as well. Or was I took another trade over here? Took it somewhere over here. I took another trade. What's it, a 1 minute for about 1 minute time frame? And yeah, let me go mark it down real quick. So this trade was basically entered right over here, right? South right below this. I got south out, right? So take profit was above here. So what did I do wrong in this trade, and why did I take this trade? He personally took out recent session lows, so I thought that was bullish for me. But guess what? It was bullish, but if you could see, it tested hourly order block and breakup block, which was a drawn liquidity, and yeah, the market changed its drawn liquidity right back to the downside. And yeah, this trade right here is the mistake I made on this trade. It's just that do not go against drawn liquidity, time the market, and only take one trade per session. Because if I gotta time the all I gotta just time the market and not make the same mistake over and over, right? Just time the fucking market, time the market. Do not go drawn liquidity and do not go against myself. And today I was looking for 15-minute contractions too, because the hourly time frame went against my bias. But guess what? It's just a recent session. It's just the other drawn liquidity which caused the market to go back down. So the next drawn liquidity was down here, right? And this is the other trade I did not take, but I did have right over here. This trade was basically out of this, right? This trade was, the reason this trade went down here is because what it does an hourly order block and breakup block, which that was a drawn liquidity. The next drawn liquidity is back to the downside, which was this recent session lows. And yeah, there's 50% mark of that hourly fair value gap, because the hourly fair value gap just got a touch, which is not enough. As I said, the market will just visit right back down or right back up, where depending what the fair value gap is, right? So the market came, the reason I entered the trade, should have entered, right? But I already took one trade, so I gotta catch the right movement, right? I gotta catch the right drawn liquidity movement, right? Can I catch a retracement? Take one trade per session, right? So the reason I entered, 5 minute order block, breakup block, and 1 minute super liquidity, and the reaction of it was it. So it's right above here, and yeah, boom, TP right there. So, and yeah, I think I got to roll it down to the 5 minute time frame. So what can we take from these lessons to the next week is to read the market right. Don't go against the drawn liquidity. If the hourly time frame against the drawn liquidity or a 4-hour bias, look for 15-minute structure or 15-minute confluence. When looking for 30-minute confluence, only look for a trendy confluence, not sideways. When the market is going sideways, do not look for 30-minute confluence. Look for hourly or above, right? When going for a buy side or sell side, take profit, it has to be the session lows or highs, or it could be the 4-hour buy side and sell side, or daily highs and lows, right? Or equal lows or equal highs. So, and what else can we take to the next week? It's time to the market, right? Time the market, get the right move of the session. If the move of the session happens and I don't catch it, I will not catch a retracement, right? And just wait for the next session to happen. I'll look at the market better and take the right trade. Take one trade per session. The reason I take one trade per session if is because I have to catch the right move of the session, not random moves, right? If I catch the right move of the session, I don't need to take any other. I don't need to take more than one trade, because if I take the right move of the session, which was the drawn liquidity, if I take the right move of the session, which is drawn liquidity, there's no need for me to take more than one trade, right? So on this trade, drawn liquidity to the downside because it took recent session highs, and the confirmation was 1 hour order block and breakup block. The drawn liquidity, right? Was the recent session lows and the 50% mark the hourly fair value gap to get touched. Caution, right? Be faster, because the market touched a 4-hour order block, which made the next drawn liquidity to the breakup block and order block, which was right over here. And right, so, and the order block get touched, which made the next drawn liquidity right back to the downside, right? So next time, be fast and do not go at the drawn liquidity, right? Be sharp and be fast. Don't get caught and do not become liquidity, right? So what are the lessons for this week to take to next week is, right, there's plenty. So one is time the market, take one trade per session. If I take the one trade per session, if I take the right trade, there's no need for me to take more than one trade, right? Take one trade per session, right? Time the market, get the right setup, catch that session move, do not catch that session retracement, right? And other than that is do not go against drawn liquidity, right? And do not go against the 4 hour, right? If do not go against drawn liquidity, do not go against the bias. And other than that is if the 1 hour is against the 4 hour bias, look for if the 1 hour is against the 4 hour bias or 4 hour drawn or if the 1 hour is against the drawn liquidity or the 4 hour bias, look for 15-minute break of structure or 15-minute confluence, right? Other than that is only do 30 when we're looking for 30-minute confluences, only look for 30-minute when you're looking for a 30-minute confluence, only look for a 30-minute confluence when the market's in a chain. When the market is sideways, don't look for a 30-minute confluence, only look for hourly time frame or above. And other than that is, let me see. So Taki, I gotta lock in, man. I know I could do this so easily. It's just that I just gotta find a drawn liquidity and I got time the market right. If I could time the market right and find a drawn liquidity, I would be killing it, right? So other than that is, do not go against drawn liquidity, do not go against bias, and be sharper. Right when the market moves constantly, right? So right when you can go from drawn liquidity to the next drawn liquidity fast as fuck. So be sharp, find the right drawn liquidity and take trades, take setup, be confident setup, be confident in your trade, be confident in know that your concept will deliver, know that the trade will deliver for me. And other than that is, yeah, that's that. And find a drawn liquidity, do not become liquidity. And yeah, that is it. That is my weekly market recap. And yeah, let's get more carrying into next week. I'm gonna watch the video. And yeah, let's color this week. Let's find a drawn liquidity, not become liquidity. Let's use 30-minute trending confluence only when the market trending. When the market not trending, look for hourly confluence or not, right? Hourly confluences or above, right? And do not go drawn liquidity, do not go against bias. When the session of the move happens and I don't catch it, I will not looking for retracement. Do not catch retracements. Take one trade per session, because if I can catch the right move, I can time the market right and catch the right move, there's no need for me to take a retracement. There's no need for me to take more than one trade, right? So yeah, let's kill this week. I'm ready to kill this week. Although I took losses this week, although I'm down 1% this week, I believe in the long run we're gonna make it back. In the long run, we're profitable in the long run. I am profitable in the long run, and this week was not gonna stop the next 4 weeks, right? It's not gonna stop the next 3 weeks. This 1 week will not stop the next 3 weeks. This week will be the week where we learn a lot of lessons and carry to the next week and fix all those lessons that we learned from this week and not make the same mistake next week, right? And keep it forward, keep on going forward, right? I'm not making mistakes. And yeah, this is it. This is what I learned from this week. Is yeah, let's crush it next week. And yeah, we got it, baby. Let's get it.